Good morning, everyone. Happy Monday. Grab your coffee, get your donuts. It's going to be a good week, but it's not looking good for Krispy Kreme. All right, so what's going on with Krispy Kreme? Down 72% year to date, $9 all the way to $2.65. I don't think it's over yet. Maxed out at $19. IPO'd in 2022, and it's been going down ever since. I love these donuts too. Best donuts right here, 100%. Pink box, Dunkin' Donuts. Got nothing on Krispy Kreme. This is number one right here. Currently going for $2.65 at a $450 million valuation now. I don't think this drop is over yet. Some of these numbers look really bad. We'll go over in a sec. First things first, they cut their quarterly dividend, canceled it. They need to use the money for something else. So cutting that dividend has, of course, destroyed that stock price, but they need to be doing that to deleverage a little bit and to raise some cash. Another red flag we're going to have for this company, if we check out insider trading, one of the 10% owners, JAB Indulgence, they are one of the biggest owners of Krispy Kreme. On April 3rd, they sold 694,000 shares. They sold 3 million shares worth of Krispy Kreme. They are trying to get out. They are trying to get out, guys. So be careful before you buy this thing. Maybe don't catch a falling knife just yet. I would let the dust settle. But they just sold 3 million. They still have 74 million shares left. They're probably going to sell it. They're going to try and fire sell as fast as they can. Don't be a sucker and buy these shares right now. Be careful. It is pretty low at $2, but let me show you guys the fundamentals and you make your own decision. The stock is heavily shorted, over 29% short float. They have 85 million shares. So it looks like we had a big drop in the institutional ownership after the first quarter. They posted some really bad numbers. Let's just go to that right now. So we have total revenue, earnings per share, 3 consecutive quarters of negative total revenue growth. Latest quarter one, they posted 375 million versus 442. That is down 15% year over year. Looks like the revenue is dropping a little bit bigger this time, down 10% in the fourth quarter and down 15% consecutively. Really bad earnings per share. They posted negative 20 cents versus negative 05. That is down 300%. And in quarter four of 2024, down 750% year over year. These are some bad numbers, guys. If you're thinking of purchasing this stock because it's low, $2.65, just be careful catching a falling knife because this revenue is dropping hard, earnings per share dropping hard. You have a majority shareholder trying to get out, a drop in institutional ownership, profit margins from a peak of 30% down to 22%. Go down to the cash flow. We got the free cash flow and cash flow from operations. It's not too bad. It's not too bad. We actually had some growth on free cash flow per share. Nothing too crazy on the cash flow. They're still looks like they're still selling some donuts. But it's the balance sheet that's a little scary. And let's go down to net income. Oof. Really bad bottom line. Really bad bottom line. Negative 33 million versus negative 8 million. That is down 291% year over year. And in quarter four of 2024, down 961% in net income year over year. This is a struggling business, guys. This is a struggling business. Let's go ahead and take a look at the balance sheet. All right, so that's the income statement. Let's look at the balance sheet. Oh, not looking good. Okay, so $18 million in cash left. This is from the March 2025, March 2025, $18 million in cash left with $860 million in long-term debt. Yikes, 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 guys. Take a look at cash flows. We go to annual. We were making around $140 million back in 2022, 2023. Looks like it got cut by a third. So Krispy Kreme not looking good. This is their main focus right now. Deleveraging the balance sheet. They're going to have to figure out how to raise more money because 18 million is pretty much cutting it. This is cutting it pretty low and they have so much debt. 860 million in debt. Let's see what their interest payments are. They're paying 62 million in interest. So if they're paying 62 million yearly, they're going to have to raise some money to since they only have 18 million left. Ooh, I don't know how they're going to do that. I do not know how they're going to do that. Let's see what else. So discontinuing the dividend to improve financial flexibility and deleverage the balance sheet. That was number one, of course. So they took out the dividend, but of course it crashed the stock. Wow. It was at $9 February this year. It just dropped to $2. That is some. So they took out the dividend, deploying capital to only the highest returning investments, more glazed donuts, expanding margins through greater operational efficiency, and pursuing quality profitable growth based upon sustainable revenue streams. They have a long way to turn this business around. They blame it also on a challenging macro environment. I think people are also trying to be healthier. They're not trying to eat too much sugar, and it's probably expensive. Who wants to buy a donut when people are barely making it these days? Lastly, just to finish this one up, they have withdrawn their full year outlook and are not updating anything at this time. So that is not a good sign, guys. That is not a good sign. If the management team doesn't want to update on some financial calls or earnings calls, it shows they're struggling. So not financial advice, but be careful if you're thinking of buying this stock. It is pretty low, $2.65, but you saw the numbers, you saw the financials. They are struggling hard. Lots of insider selling. One of the 10% owners is selling, which is a bad sign. They just cut the dividend. They're still worth about $450 million, and in December they still made $1.6 billion. So either they're going to have to close down a lot of stores to sort of improve their financials. They're going to have to raise money somehow or dilute more shareholders and issue more shares, but that's going to crash their stock. They're kind of in a pickle. They're stuck in a pickle. But anyways, guys, that's Krispy Kreme for you. Let me know what you guys think. This is my favorite donut spot. Thanks for watching this short one. Don't forget to like the video, give me a thumbs up, comment donut, and we will see you on the next one. Peace.